If it feels like you spent more this summer than last year, you're probably right. While rising costs are not new for Canadian consumers, inflation numbers for August show prices were even higher than economists expected.
We and financial markets had been looking for a fairly notable uptick in inflation. It was just a little bit more than what we had expected.
Gas prices logged their first annual gain since January, rising nearly 1% compared to the same month last year and over 4.5% since July. But a surprise in this month's report was the cost of housing. Shelter costs rose 6% in August compared to last year, with rent prices jumping 6.5%. For some tenants, including this man in Toronto and his neighbors, frequent rent increases are becoming too much to bear.
Someone who was paying about 1,200 is now paying 1,500. So imagine if you're on a fixed income, what that means. Nobody's pensions or wages have gone up that much.
For homeowners too, the Bank of Canada's 10 consecutive rate hikes are starting to weigh heavy.
The rise in mortgage interest costs is predominantly due to the fact that the Bank of Canada has raised interest rates so aggressively. So some would assert that it's the Bank of Canada that's causing inflation.
This month's inflation report will be one of two for the Bank of Canada to consider when its policymakers meet in late October. And the Bank of Canada's Deputy Governor is not ruling out further action.
Underlying inflation is still well above the level that would be consistent with achieving our target of 2% CPI inflation. And we're prepared to raise the policy interest rate further if needed.
Nivrita Ganguly, Global News, Toronto.